India's second largest software services exporter, Infosys, expects a sharp cut in its full-year revenue growth from the earlier 4 to 7% to 1 to 3.5% in constant currency terms that it projected during the March quarter. Infosys cited a distinct pause or slowdown in some verticals after reporting first quarter net profit that rose 10.9% year-on-year to 5,945 crore rupees. The first quarter performance of top IT services players as well as mid-cap firms has been subdued, reflecting macro uncertainties. The numbers of the top 4 firms shows several misses, hinting at difficult times ahead. So what does Infosys guidance say about Indian IT's future?
See, the future is a kind of a broad term. And, we cannot say or, articulate that or predict that the future is going to be uncertain because of that. What we can say that in the near term, the organizations are becoming more cautious in terms of their spend and in terms of their strategy. And that is where Indian IT services companies will become a little bit more conservative than they were before. But having said so, at this point in time, I can say that most of them are getting good business as well. There is no major cause of concern at this point in time. Yes, the guidance may vary here and there a little bit because of the changing geopolitical situations at this point in time. We need to wait and watch and see that how it is unfolding.
The top 4 IT players got some of the best total contract value or TCV signed in the fourth quarter of FY23 as well as the first quarter of FY24. But these are not reflected in the revenue. Tata Consultancy Services signed TCVs worth $10 billion and $10.2 billion in the Q4 FY23 and Q1 FY23, respectively. However, revenue growth in Q1 FY24 was flat or saw a mere increase of 0.3%. Infosys had a similar narrative. The Bengaluru headquartered firm had TCVs worth $2.1 billion in Q4 FY23, but revenue growth for Q1 FY24 was 1.3%. While the numbers do not give a rosy picture of the industry, the commentaries from the management are also unexciting. When asked, K. Krithivasan, Chief Executive and Managing Director of TCS, could not offer a clear response on how long this uncertainty would continue. According to the HDFC Securities report, the current disconnect between growth in bookings and the soft revenue rise is largely due to the impact on discretionary services. An Elara Capital report on Infosys points out the same. Visibility on such deals transitioning to revenue seems obscure because of lower volumes, decision-making delays, and cut in discretionary spending that's likely to continue in Q2 FY24, the report says. Business Standard Shivani Shinde shares an overview on the future of the sector.
Both TCS and Infosys have refrained from giving any timeline as even if the second half of the year they will see an uptick in demand. Add to this, you have the employee headcount coming down, you have attritions which are dropping, plus there again is no clear addition or any commentary coming on what will be the hiring targets, which again signs for a demand which is extremely slow. Now, what's happening is also you need to understand here is, yes, they have signed really large TCVs like TCS around $10.2 billion, Infosys is almost $1.7 billion, but these deals are not getting ramped up, or there is an absolute pause in the work that was supposed to start. So, and add to this, all of this is the fact that when these deals will start, there is absolute no clarity from the client side. So it looks like this year, even the second half of this year may not see a great growth from the top 4 IT services player.
Infosys' guidance, along with the subdued performance of top IT firms, points at a challenging future for the sector. The sharp cut in Infosys' revenue growth projections and the impact on discretionary services have raised concerns. However, TCS and Infosys have signed 50 and 80 proof of concept deals respectively in artificial intelligence. It's a potential silver lining for the industry that can impact pricing and margins positively in the coming quarters.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.